Hey, this is Chris Franco, and you are listening to Compound Money Quietly, the CMQ Investing Podcast. CMQ investors, welcome to the show. It's great to have you here. It is an early morning on Monday, November 15th, and I'm going live on Instagram. I try to do these at different times, kind of at random, to see what, to basically make ourselves available to whoever's around, because there's a lot of people who follow the Charlie Munger Quotes page. So for right now, if anyone has any questions, as always, just drop them in the comments or use the question queue. My plan is to go through and answer them. I just uploaded a new podcast that should be live. I think if you subscribe on Apple or Spotify, you should have it in your feed, hopefully by now, but if not, then very soon. And I'm about to go to the office, so I just figured I'd check in here. Okay, All Calls Me says, what is read in annual report? I assume you mean like, what do I look for in the annual report? Well, there's no perfect formula for this, but I think first and foremost, it's so important to read the 10K if you're going to buy an individual stock, and not just 1 year's worth, but you should be reading many of their 10Ks. Try to see how management's plans actually turned out. Look at how they allocated their capital in the past and how did that work out for them. Try to make these assessments of the quality of the management based on, the previous track record. The other thing I'd say is when you're looking at a 10K, it's important that you're looking at the competitors' 10Ks in the same context, because you need to understand where that business that you're looking at, you need to understand how it's doing in relation to its competition. And if you don't do that, then you're still buying something without full knowledge of what you're buying. And I think that's one of the biggest mistakes that we can make as investors, is buying something that we don't know much about, but thinking that we know enough about. Hope that's helpful. Okay, FOSATRF says, personally, what's your best finance book? My best? You mean probably my favorite? I assume that's what you mean. It's tough to put one. My favorite investing book is The Warren Buffett Portfolio by Robert Hagstrom. That is my number one. And that can always change. But for now, I'd say that book has had the best, it's resonated the most with me. And I think it's a really interesting way. It doesn't mean you have to invest the way that's prescribed in the book, but it gives a really good account for the investment process that investors like Charlie Munger, Warren Buffett, and others, take, the process that they use. And it does a great job of showing how, that process is very multidisciplinary. Or I shouldn't say very, it is a multidisciplinary process. And so when I talk about the benefits of being a multidisciplinary thinker, that book really shows how that benefits you in terms of investing. You understand what you're doing better if you understand, multiple disciplines and the big ideas from all the disciplines. If I sounded like I had a second guess that, I had a text pop up right as I was in the middle of my thought. Okay, there's a question here this is from Shakar, who asks, what do I think of Microsoft? I've owned Microsoft for a while now. I think it's a great company. I'm not suggesting you buy it, or that I'm not going to get into if I think it's the right price right now, but it's something that I plan to hold for a very long time. That's a 10K, by the way. As I was learning 10Ks, I remember that was one where I read it and I was just, this is not something that you should go invest based on, but Microsoft is like one of the most incredibly organized companies I've ever read into. And their 10K, if you just read 10 minutes of their 10K, you'll see exactly what I mean. If you could ask, Spencer asks, what's up, Spencer? Spencer asks, if you could ask Charlie Munger one question, what would you ask him? Ooh, that's a really good one. I'd say, would you be willing to come on the CMQ Investing Podcast? Do you think Munger will sell Alibaba? And this comes from, make sure I get this right. Okay. The question was, do you think Charlie Munger will sell Alibaba? I have no clue. I don't know why he would, considering he recently added to the position. If I was a betting man, I would say no, because Charlie Munger is not someone who frets over any sort of volatility. That's something that's, I'd say undoubtedly true of him as an investor. He is a very concentrated investor, and he's he's a master bump ignorer. I think that comes from Robert Hagstrom's book, by the way. Volatility doesn't bother him. And as long as he knows what he has, he wants to hold it for as long as possible. And the best example I can give of this is when he bought Berkshire Hathaway, he bought his shares for $16 per share. And as he's described, and I'm paraphrasing, his shares are now worth 400 something thousand per share. What do you say? I think it was, I just sat there. That's the kind of investor he is, because he takes a big idea like compounding and he takes it very seriously. He takes a simple idea and he takes it seriously. So, the longer you can let your money compound uninterrupted, you can have that exponential growth that he's seen with Berkshire Hathaway as an investment. And he's taken a similar approach with his other big investments. So Charlie Munger has said that 90% of his family's net worth has come from 3 investments: Berkshire Hathaway, Costco, and his investment with Li Lu. Someone says, why don't you smile ever? I think I do smile. What if I smiled and I just had like diamond teeth? That'd be kind of cool, right? Would it be more viral? Okay, a question here about when to sell stocks if you want to take profits. Well, it all depends on your situation, but I think the best answers that I can give you, and I tweeted about this, I made a diagram, it's on Twitter. My Twitter, by the way, is Chris Franco, Franco. And I'm huge on Twitter, by the way, guys, like 1,100 followers. I'm big time. So here's what the best investors have said generally. If you lose confidence in the management, if the company loses their competitive advantage, or if you have something better you can do with the money. Those are 3 reasons right there. I'd say the number 1 is just opportunity cost. If there's something better you could do with the money and you need to liquidate a position so you have some cash to do it, then you do it. But going back to the competitive advantage piece, that's critical, right? Because if a company loses their competitive advantage, it's only a matter of time before margins are going to get compressed, before, they're just not going to be as healthy of a company. That's what competition does. It squeezes margins. And, typically if one competitor can come in, soak in another and another after that. And if it's a exciting space, there's all this. Look what's going on in the EV market right now. Or how about the streaming, the SVOD market, meaning streaming video on demand. If there's money to be made and there's room to get in, companies will rush in. And so if a company loses that competitive advantage, if they lose that moat, that's not going to bode well for the future earnings of that company. So that's a reason why you might sell in that case to take profits. Same thing with management. If the management is being unethical or doing things that you just feel like are not in the best interest of you as a shareholder, it's another reason to say goodbye. But as I said, I think the biggest reason is just opportunity cost. Just Jalaj says, I think I'm more interested in the fitness industry more than anything for some reason, like this growing trend of awareness and all. What do you think? Okay, let me just zoom out for a second. Look at Peloton, right? Peloton's like a big thing. Oh, the connected fitness, and it's a big market, totally. But there were things in the past like this. If anyone remembers like the NordiTrack or any of those, they're made for TV products that were all for, in-home aerobic workouts and in-home weightlifting, the NordiTrack, the Bowflex, it's the same kind of thing. It's just the difference is it's connected. So I don't think it's a new trend per se, but I think it's a powerful trend that certain companies are going to, take advantage of. And, Peloton is one where I'm not saying you should buy these stocks, by the way, but there's definitely something there. I worked with a company, a longtime client of mine was in that space. And so I'm very familiar with it. And for sure there's something there that's not, going away. But I think the underlying, and I think this is good for investors, the underlying part of it, like the core motivator, the core force of this desire to increase your longevity and look more attractive, that's a powerful force to have behind any sort of product. So I think, and that's another reason why, it's a space that I think there's a tailwind there. That's there regardless of what the product is of the moment. Like I said, NordiTrack, Bowflex, or if it's Peloton and that mirror thing, which I think Peloton bought. Henry asks, do you hold stocks as long as possible because of future dividends or because you want to sell at higher prices? Well, I think because I look at a stock as an investment, as something that's, I want to appreciate in value that will also spit out cash. So it doesn't have to pay a dividend. If the company reinvests their money into growth, I'm okay with that. I never buy a stock because of the dividend. I buy a stock because I think I'm I'm laying out money today to get more money back in the future. Not because I think that someone else is going to, speculation is buying something because you think someone else will buy it for you for more. Ideally the best investments you can hold forever. That would be, the best case scenario. So I think in general, the reason I would buy any stock is so I don't have to sell it. Now, I'm not perfect about that. That's not something that as I've said before, I didn't just roll out of bed knowing that. And just because I know it and I understand it and I've internalized it, it doesn't mean I never buy something and don't hold it forever. But I'd say that's one area where I've consistently improved. And I think for me, it's the no-brainer thing. It's just hard to do. Mary Sue says, "You cute." Thank you, Mary Sue. I appreciate that. I'm going to pin that comment. Just Jalaj says, "Thank you for your insights. I really appreciate it." Steve Rogers says, "The night is dark and full of terrors." I have no idea what that means. Hopefully it's not something weird. Kunjal says, "Apple is a fitness company." I mean, I wouldn't say they're a fitness company, but they definitely have a part of their company is definitely fitness related. I'm a fitness company. Making sure I got all the questions. Oh, here's one from Christian. It says, "Do you prefer Charlie Munger to Warren Buffett? And why or why not?" Well, I don't want to say I prefer, that's kind of do I like one more than the other? I think they're very different. For me, Charlie Munger has been more influential in my life, but I've also learned probably more about investing from Warren Buffett. But I wouldn't say I like one more than the other. I think I'm definitely I've become an internet authority on Charlie Munger. So I'd say I'd have to put him above, but it's not because I think I like him more. I think they're very different, and I think that's why they're great partners. Okay, we have a question here from Jenny who says, "Is Tesla stock going down?" I can't predict that stuff, but I mean, I certainly think it's overpriced personally. And I don't think it's ever a good sign when Elon Musk is selling or his brother is selling. I think it's interesting to look at insider transactions. But I think Tesla's a really cool company. There's no denying that. But Tesla's also a company that's being buoyed up by a narrative. It's being buoyed up by hype. It's being buoyed up by very sophisticated, I don't want to say manipulation, but by media, by kind of media manipulation. I mean, Elon Musk is very sophisticated at how he's able to change the narrative, reposition things, reframe things, using something like his Twitter account. And, I'm not knocking the guy. I think there's always, a gray area here. I don't think he's all good or all bad, but I think there's a certain cultish quality to the Tesla loyalists that I think is a little bit delusional based on just the nature of competition. The likelihood that Tesla just dominates the EV market. What example in the past is there of that? Where one company came into a space this early where there was already established players and just took over everything. I think that's what the stock price currently is assuming, that Tesla's not going to have competition. And I think that's just unrealistic. And Tesla also has not done a great job of living up to a lot of the promises that they've made. There's a website about Elon Musk's promises. And it doesn't mean, as I say all this, not because I'm hedging here, guys. I'm not one of these people that wants to, at any point, sound like I'm, like, here, I know what to do. Go buy this stock right now. I hate those people because they're just full of it. They're trying to sell you like a course or something. My thing is there's so much nuance here. But from just zooming out and trying to be objective, look, a lot of the things that Tesla has talked about, whether it's the cyber taxis, the cyber truck, fully autonomous driving, all these things that have, helped the narrative of the stock, they've not come to fruition. And I think you have to look at, the words and the actions of the leadership. And that to me is a little bit concerning. I think that, and the price is just insane. The market cap is not the justification for it. I'm not saying I know everything about it, but the assumptions are in my opinion, the assumptions are there's just not going to be competition. Tesla's 15 companies and they're going to dominate. There's going to be regulation. There's going to be more competition. There could be issues with management. There's a lot of uncertainty and it's still such a new space. So I think right now the price to me is just delusional. Personally, that's what I think. So Jenny, to your question, I'm not making predictions here, but if you had to make me make a bet or guess here, I'd say, yeah, it's going to go down. Question here, before investing in a stock, do you have a set of benchmarks or rules that the stock has to pass? In other words, do you have a framework in place? I have a rough framework. It's always evolving. I like companies, and I'm not giving you like word for word what it is, but here's just, kind of my rough version right now is, first of all, how are the business's fundamentals? I like a company that has good cash flow. I think that's really critical. I like a company that has, is a leader in their space. I like a company that has a large addressable market. I like a company that has a track record. So I don't like IPOs. I like a company with that I understand, that I can actually, make some inferences on. And I don't think I understand every kind of business. Even being a business owner myself and an entrepreneur, I try to stick to, as Charlie Munger and Warren Buffett would say, my circle of competence. And I think a lesson there is like my circle of competence has gotten smaller because I've become less overconfident. And that's been really valuable for me. That gives me more time to focus on learning some of these other companies, and so that maybe down the road I'll be able to see something unique. It's got to be reasonably priced, and I have to say I'm not perfect at that. I've tried to improve on my ability to read, just the financial statements. Those are the big ones. It's not that crazy. I think the key is I just try to go through and answer. I ask a lot of questions and try to answer them. Like what has to happen for this to keep growing? What assumptions have to be made that I think are also going to hold up? Okay, Jim asked me, do you invest for other people? Do you run a fund? I don't, but maybe one day. I could see that one day. I mean, as long as I think I can, actually outcompete. I wouldn't do it just to do it. I would do it because I thought I had some advantage. I do, in my line of work, I do allocate quite a bit of capital, and I'm in business because I get better returns. It's not exactly the same, but one thing that got me more interested in investing was I had a client tell me that my company was like a hedge fund for marketing. And it made me think like, what does a hedge fund do? And when I learned that hedge funds are, have proprietary strategies and they try to achieve alpha or outperformance, I was like, that's exactly what I do. It's just in the world of marketing. I am in competition based on my performance and my track record. And, my whole thing with my business was I'm in New York City, right? So there's a marketing agency on every corner. So to compete here, it was very clear to me, like I need to be measurably better. And so, I'd always come up with like new ways and saw things people missed. And that's been something that I've realized applies to investing that I never realized it did. Like I didn't think that had any sort of, my understanding of what it took to be a great investor, let's say 6 or 7 years ago, was totally wrong. And I realized that some of the things that I do and I like and that come natural to me and that work in one area, actually that same kind of thinking, it applies in the world of investing. At least it's the ways that some of my favorite investors think, like Charlie Munger as an example, even Michael Burry. Not to say I'm on their level at all, but it just, it gave me, there's just a lot of, I don't know if you guys ever feel like this, but there's not a lot of people who are like, you could be a great investor. It's just, I thought growing up you had to be like Albert Einstein. And I realized a lot of the skills that I had naturally that I still work on, that they actually are a lot more relevant to investing than what I thought, than maybe like knowing calculus would be. I'm going to answer a few more guys and I got to get to the office, but here's a question. Does Charlie believe in technical analysis? If yes, what is his strategy? He is not into charts. He's not into trying to estimate what the market will do. And that's something that I've learned from firsthand experience is true. Like there is not much. I get that if you're doing short-term stuff, you might read charts, but I just think it's generally BS. And it doesn't mean you can't make money doing it. My question that I always ask myself is, can I do this? If I do it 100 times, will it work 100 times? And even if the answer is, will it work, 90 out of 100 times? It's a good lesson from science is reproducibility. And if you can't reproduce the results consistently, then it's not real. So that's how I look at technical analysis. There's a lot of, you're just trying to forecast human behavior, which is human behavior is not, how do I put it? we're very predictable as humans, but the data that you would need to predict what we would do is not available. So there's so many things that we can't measure that impact how we behave. So as I said, human behavior, we are very predictable, but we don't have the data required to make consistently accurate predictions about human behavior. And, just understanding that fundamental truth, I don't waste time on stuff like technical analysis because it's not, there's no longevity in it. I'd rather find a great business that I think I can, load up on and let ride for 30 years. I mean, I'm not saying that's easy, but that's to me the proven way to a better result. And frankly, like just a better way to go about it. It's less strenuous. Once you figure it out, you don't have to check refresh your Fidelity brokerage account every 3 minutes. Kunjaz says he's obsessed with Munger. He's watched hours and hours of YouTube videos. I can't get enough. Well, I hope this page is serving you well, man, and I hope you'd like the podcast. A couple more questions here. My thoughts on GameStop. I'm not buying. No interest in buying that. And I don't see any reason. I don't see a bright future for it, right? Like a company with a lousy track record and a bright future, I'm trying to avoid that. And I think that the investing intellect, and intellect's not the right word, the investing maturity of the folks who are so bullish on it, I don't want to do anything they're doing. I would have bought GameStop 10 years ago. If I was 10 years younger today, I would be all in on it. But I've done too much self-education to go for that. And I hope everyone makes a lot of money on it, by the way. There's nothing, not against it. It's just, I'm personally avoiding it. Henry asks, my thoughts on Peter Lynch. He's one of my favorite investing thinkers. I like, one of his books is one of my favorite investing books. And I think he does a great job of just being able to think and write very clearly about complex things. And I know how hard that is, so I admire that. And I think that his track record speaks for itself. He's not one of these guys that's out here like pumping stuff to try to make more money. I think he's done a nice job of sharing what he knows in a very like honest way. Obviously he's made money selling books and things like that, but I mean, he should be able to do that. So yeah, I definitely, I respect him, and he's one of the investors I consider like a legend who, we talk about CMQ, it's trying to find the time-tested lessons of legendary investors, and I'd consider him one of those. Spencer says that Michael Burry has a huge position or short position on Tesla. Yes, he is also shorting Cathie Wood, but shorting Tesla has not worked out very well for people. I mean, Tesla's defied a lot of conventional logic. Waking Up from Matrix asks, how do you feel about Alibaba? Munger doubled down. Yeah, I've owned Alibaba since 2018. I purchased more when it really dipped down, and it's one of the stocks that I try not to own a lot of individual stocks, but that is one that I have a solid position in. It's the only concern I have about it is what ownership of it means for me as an American. And but otherwise, I think that long term, it's a nice play. Not saying that you should follow my lead, but that would just, again, I bought it in 2018. So when I bought the dip was actually lower than what I initially paid. And when I bought it at the time, and I wasn't as sophisticated as I am now, but I understood the price relative to the value I felt I was getting, and I was okay with that. So it was down, 10 or 20% from where I bought it. Rarely will that be a reason I buy more of something, but I felt like what had gone on in China and kind of the overcorrection to that would be something that long term I wouldn't look back and be that concerned about. And by the way, I don't do any like shorts. I don't do any call options or puts or anything like that. I'm kind of a prude. I just try to find some good companies and index funds and just, do sensible things. I try not to, I feel like if I get too into like the gambling side of things, it'll just lead to something bad, but that's just me. But, yeah, I'm long on Alibaba. My only concern is just what ownership means. All right, folks. Well, check out the latest episode of the podcast. I will work on getting this up for you today. I'm traveling tomorrow. I'm going to give a speech in Florida, and I'm going to bring some audio equipment so I can still do some podcasts. But look out for more episodes. CMQ Investing. It's on Apple. It's on Spotify. Make sure you subscribe, like, comment, share, do all that good stuff. And thanks for following Charlie Munger Quotes. Thanks for joining the chat, and we'll do it again soon. So let me do the quick sign out. This has been Compound Money Quietly, the CMQ Investing Podcast. My name is Chris Franco. Thank you for listening. We'll talk soon.